Or just new to our group, welcome to the opening playbook. Our mission here is to be a bridge for new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The opening playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm. Try to trade without emotion involved in your decisions. Go at your own pace. Don't try to keep up with us or other traders. And ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. Every move counts in the game they play. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. informational, spinning around with every trade. They set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Tuesday, April 21st. I hope everyone is having a good day so far. We are being joined by Graham Linman as we speak. Hello, Mr. Graham Linman. How are you?
Hello, hello. How is everyone doing this morning? Market's
Yeah.
up a little
Market is
bit.
up.
Can't complain. I'm going to take the screen over.
I'm up. You're up. Market's up.
That's right. Now, where's Nate is the question. I'm just kidding. Did he have a class this morning?
There's a pending question about that. Nate's kind of MIA. Jordan had some stuff scheduled to go out, but didn't seem to go out, and she's in a meeting. I don't know. We're not sure what's going on.
We're going to play Where's Waldo with
I
Nate.
hope Nate's okay.
Yeah.
He,
Let's see. How's everyone doing today?
he might very well be in the meeting. I'm not sure.
That is true. That is true. Well, we've got an exciting market, a lot to cover today. Curious for you guys, and I know we asked this a lot, but just where you're seeing things right now, do you think over the next month, we'll say, do we go higher or lower? Or I guess flat. So higher, lower, flat. Let me know in the chat what you guys think. I know Nate gave you guys some insights yesterday.
Yeah, I'm going to say higher. I'm a
Slightly
higher
higher or
guy.
choppy, higher technically speaking, but flat in the summer. Higher up. Wow, the Bulls are back.
Yeah. Well, you know what it is. The question is, are you asking whether you think it's going to go up or whether you think it should go up? It's
True.
like I think it's going to go up. Well, I don't know if it should go up, but I think it's going to go up. I think.
Yeah. PO says depends on Trump. That's probably the truth of it all. But let's see
Yeah, I
what
guess.
the Trumpster has to do.
Look, I feel like every month that goes by, where more and more, the market is more and more resilient to the Trump effect.
Yeah.
Like it has less and less of an effect.
Yeah.
Even things that should have very little effect, or that should have a big effect, have very little effect. So I don't know.
We will see. Well, I'll give you guys my analysis. I'm pretty excited about these markets. You'll see why here in a moment. But I do also think we could see a summer buying opportunity, we'll call it. I'll show you where that may be and why. Let's see.
Summer dip in the pool.
That's right. Summer dip in the pool. Hopefully, and I'll tell you guys, I'll show it to you today. If we get the dip that, kind of lines up on a few charts for this summer, could be a dream portfolio situation. We were pretty much at a dream portfolio mark mid-war. It just happened that the day it all turned around. It was kind of like, well, we were going to wait for a 15%. We got to a little over 10%. So we missed our dream portfolio, but hopefully you guys made some good change on the rally back up. Dinosaur Skip is asking, where's Bitcoin going? I personally believe that Bitcoin's going to start heating up here again in the fall. Look for September, October as our big buying opportunity. We'll talk about it as we get closer then. But for now, it's in a The cycle is bearish for Bitcoin. We may see some pops here and there, but overall, I'm turning my eyes elsewhere for the time being. Alrighty. Well, with no Nate here today, I guess we'll dive right in and get the party started here. We'll start with the Telegram. I've got 2 Telegrams of the week. We haven't done a full breakdown in a couple of weeks now, so we've got some catching up to do, but Lotto Board has been crushing it on this recovery. Obviously, as we noted here, it's funny. I feel like you guys may have noticed this too. Anytime we do a new launch, a new product comes out, it's been killing it, and it goes through a dry spell immediately. It's the launch effect, we call it. So we had 3 losers out of the gate. Of course, naturally, that's what to be expected. But since then, been on fire. We had some massive winners on Iron and Google last week, 275%, 424%. Overall, Lotto Board since the launch, including those 3 losers up front, starting out with just 500 in each, we're already up $5,000, $5,559 in profit in under 2 months. So very, very happy with the performance here overall. Hopefully you guys are in the program and have been getting the alerts. Very excited about this, especially considering what I have to show you today with this whole AI melt-up phase that I think we will be seeing here soon. My second, more informative Telegram of the week. This came last week. 7-day win streak. They gained over 7%. If you look at the numbers here, very, very bullish momentum signal for the market. So over 1 month, 60% higher. That's above average. Over 3 months, 67 or 66% of the higher. That's above average. Oh, excuse me. I'm looking at the wrong thing. This is all years. This is where you want to look at. Look at this. 85%, 85%, 85% higher over the next 1, 3, 6 months. Very, very bullish. Look at the averages. A 6-month average return based on this momentum signal that we saw last week, 14%. It also is 14% annually, but just keep in mind, if you got 14% in a year, you'd be pumped. It's 14% in 6 months. So this is a very, very strong momentum signal in the market. I think Nate showed you guys the weekly and monthly charts and what that looks like. Overall, looking very, very good for us. Hopefully you guys were able to take advantage of this as we continue to drift higher. Now for the gold trade update, it's not as pretty as it was a few weeks back. We all know that. With the interest rates, we've seen the markets go to all-time highs. Meanwhile, the interest rates have gone higher as well, which isn't typical. It's not a typical correlation. It's normally inverse. And this inverse correlation, or this correlation where interest rates are going higher, is hampering our gold trade. But overall, we're still profitable. 18-5 of the closed trades, $1,000 booked in profits. It was a lot higher before that big spill, but we got 3,700 open. I think it's 3,600. I just looked before logging on today. So we're getting right back on the right track. I do think that this trend in gold will continue. My target's still 5,800 on gold for the conservative target. More moderate target, 6,200. So we should have plenty of opportunities along the way to keep this stacking back up. For our morning market update today, we'll dive right in here. Markets are a little bit higher this morning. They, at the open, immediately came back right around to fill the gap and then bounce right back higher. We're long in the 60-minute income trade. Loving that. But as you see, gold is still down. So markets are moving higher. Gold is not moving higher with it. Again, that has to do with the interest rates right now. Obviously, the war, energy prices. We've all seen the gasoline prices, which are pretty insane, which may not be going away for many, many months. We'll see. But that is holding things like gold down. Meanwhile, the markets are bouncing back higher. The IWM, let me just check in on that. Let me show you IWM. I'll just show you a little comparison, which is the Russell. Look at this bad boy. So here, let me just show the SPY. Here's the SPY. Back to all-time highs. Very nice. IWM, the small caps are leading the way. Now, given what I just told you about gold, interest rates, and now small caps, does anyone notice anything odd about this situation? If you guys are familiar with small caps, these are small companies, smaller companies. They typically take on a lot of debt to operate. So for small caps to really boom, they really need interest rates to come down. They need interest rates to be lower so their debt's cheaper, so they can scale faster. Well, we're seeing interest rates go up. We're seeing, like, look at the bond market, still stuck way down here. Gold, not at all-time highs, not even near all-time highs. Meanwhile, the Russell is booming. To me, this is very, very interesting because, again, typically speaking, with the interest rates spiking like they have been, you would expect the Russell to be stuck, just like gold. Not the case. I'll show you in just a few moments what I think is going on. But to give you guys a little spoiler, I think that we are officially entering, we're just getting started. We're entering the melt up phase of this AI boom or bubble, whatever you want to call it. I'll show you that chart comparing it to the 2000s.com boom and bubble. It is pretty uncanny. But to me, seeing small caps go roaring higher, outperforming the broad market, even with interest rates climbing, is a key sign that we're going to see speculation come right back in. I don't know if you guys saw the Allbirds rebrand, if you'll call it that, the other day.
Mm.
Did anyone see Allbirds?
Yeah, we were talking about it briefly. It's insane.
Yeah, they go from shoe company who's broke and bankrupt to now supposedly AI data center play or something. They're selling GPUs. See, I have no clue. I don't know where they're getting that out of their shoes, but the stock was up 400% in a single day on that news. We are officially, in my opinion, starting to enter this final melt up period.
You know what's really interesting about that, if I can interject for half a minute, is that they they took their basically they sold off their assets. They had, I forget how many losing quarters in a row, some ridiculous number of losing quarters in a row. They sold off their assets, and the way they got into AI was they are doing a short-term lease program for AI companies that need temporary increases in power. And it's a very interesting concept of, kind of this short-term rental gap for companies that are trying to scale with AI and need, aren't ready to make a full investment in something. They can basically lease power. And I mean compute power. I don't mean electrical power. And it's an interesting concept.
Yeah, it is an interesting concept. That's the exact same thing we saw. If you guys remember, who remembers BITF?
Sure, we were trading that back and
Yeah,
forth a lot.
it was a Bitcoin miner. Obviously, that takes a lot of energy. They similarly, although it's a little bit more, correlated to go from a Bitcoin miner to an energy supplier for AI than a shoe
Then a
company.
shoe
But
company?
hey,
I don't know what you
they
mean.
they've just rebranded actually to Keel. It's no longer BITF, it's Keel Infrastructure. So they flipped from Bitcoin mining to AI data center play, giving them energy because they had all the energy. And look at this stock. This was BITF. We made a lot of money on it back. When was it? September, October. Crushed it. Obviously fizzled out a bit since then. Whoops. But similar play for Allbirds there. Very interesting. Thanks for the insight there, David.
It kind of
So,
reminds me of the companies who were like leaning into Bitcoin in, 2021 and stuff that were like turning themselves into tokenized companies. Even though,
yeah.
who was was it Kodak who did that, or one of the camera companies
Yeah, I think so.
that went up like however many, 50% or whatever in one day, and then, I think ended up giving it all back. But just
Oh, look at Kodak now.
oh well, they're back. Maybe they announced that. So in an unrelated announcement, Opening Playbook is actually becoming an AI data source. Show.
Yeah.
I thought you were going to say sponsor of Kodak.
Yeah, this was the Kodak play
Yeah.
back in
Yeah, wasn't it like
2020.
500% or something? Or maybe
Dude,
more than
it's
that.
a lot more than 500%. It's like 2,500%. Went from
Wow.
$2 to $60. This is a weekly
30x.
chart in 1 week.
30x. Yeah.
Yeah. Anyways, I digress. But wow, thanks for bringing up Kodak. Should have brought that up about 2 months ago.
Kyle said, "How can Nate have a when we can't find the link?"
Yeah,
Do you
there
mean
were
the
some questions.
morning meeting?
So what happened was the person who normally sends the links out this morning for your morning meeting, Jordan, her computer did an update overnight and went back to Central Time. So all of her messages getting people to your meeting this morning are going to go out in about 17 minutes.
Hopefully we cancel them so they don't go out in 17
Yes,
minutes.
she's aware now. But
But guys, that's why I do try to remind you as much as I can to do it on your calendar, because we'll send you as many updates, texts, and a million things. But there's a million different ways those get stuck, lost, spammed, whatever else. But if you just have it on your calendar every day, I think it's a lot easier, because the link stays the same. We're only going to rotate it every once in a while to keep active members in there, but we're not going to change it every day. So I think that's the easiest way to get in.
Yeah. All right. Anyways, all that to say, we're slightly up today. Nate, you missed my whole spiel about interest rates going higher, gold being suppressed by it, but somehow small caps are ripping. They're leading the pack.
Yeah, I don't think interest rates are going to go higher though. I think it's all just a bait and
Short.
switch. You're going to get everyone hyped up. They're going to do, one raise or predict it, and then they're going to go down like to zero right before I break ground on my house. That's what I think.
Yeah, that's what we need. Let's all speak that into existence for Nate here.
Right.
So let's
Name
do a
it and
negative
claim it.
interest rate so they pay you for your mortgage.
Exactly. I'm actually going to
Nate-
borrow
Nate's-
it for when the Bank of Japan did the -2%, they're actually going to go back to that and fund my house. So
I used to Google, I would say like, how can I get money? Because like Sweden or Switzerland, one of the two has a negative interest rate. I'm like, how do I get a loan from them? It's like,
well, you can open a Forex account and do the positive swap if you'd like, but you have to
Yeah.
be a little careful on the
professional
underlying.
builder build your house, or is it just like you and your brothers out there with hammers?
Well, it does help that my brother is a professional builder, Dave. So that
didn't
joke
know
kind
that.
of cancels itself out.
It does. It does. Yeah, yeah, yeah. All right, I'll go back in my hole.
Yeah. All right, for news this week, not a ton on deck. We do have President Trump spoke this morning. I have no clue what he said. Markets are up higher, so it can't be that bad. Or who knows? Who knows?
Well, actually, it could.
Yeah,
Actually,
who
it
knows?
could. And
It could have been
doesn't even
terrible.
matter.
All right. But next week, speaking of interest rates, we do have the Fed interest rate decision on Wednesday, 2 p.m. We all expect a hold. The thing that will be interesting is to see what he says about the future, although I don't even know if anyone cares about what he says about the future, given that he has done, this is his last one, I believe, his last Fed interest rate decision. Maybe he'll just go out with a bang and just raise them 5% while he's there. No, I'm just kidding. But that'll be the big topic of discussion for next week, and what the board of directors also thinks of further interest rate decisions down the road. Again, right now we're seeing them turn higher as far as future projections. I think there's a 50% chance now that there's a interest rate increase this year, which is pretty insane given all we've come through. However, I actually do think, Nate, I know we're kind of joking, but I do think that it's a temporary war-based analysis, and hopefully if things resolve and peacefully end and go back to normal, we will hopefully see this interest rate cut market come back. With that said, for the charts of the week, here's an interesting one. This is looking at the 2026 and 2027 estimated revisions. So this was from a guy on, I didn't get his full name. I try and source everyone. He does awesome content. Bank of America analysts. EPS estimates continue to climb higher. Look at this. This is look at the dash line. Don't look at this one because it's going to be skewed by COVID 2008 and the dot-com bubble. But look at this dash line, kind of the average of revisions, always ticking a little bit lower actually. Here's 2026 revisions. They're spiking it higher. 2027, they're spiking them higher. Interesting to me, we've just gone on 6-7 months of pretty much zero market return. I know now we're at all-time high, so it's not true anymore, but pretty much no positive pricing in on the earnings. And now I think they're playing catch up. They're saying, uh-oh, we just kind of sat on our hands for too long. We need to get back in on this before what I think is going to be the next melt up occurs. I shared this chart with you guys a few times. I'll just reiterate it once more here. We saw the VIX get above 28.3, which puts it in the 90th percentile the other week. We always say, sell when others are greedy, buy when others are fearful. We were in extreme fear. I told you guys the last show we had before my vacation that, hey, I know we haven't hit my key level yet, but I'm buying anyways because of charts like this, where it says when fear gets too extreme, typically the best buying opportunities. So just look at this first bucket here. Dark blue is your average return in the S&P, 1990 through today, 11% average S&P return. If you were to only buy when VIX gets above 28.3, which is in the 90th percentile, the average annual return doubles. So from this point, this was March 29th. So I know we're up already about 5, 6, 7% since then. But look at this. Over 1 year, it's a 22% average. Plenty of meat left on the bone. 2 years, 37%. 3 years, 48%. And then it starts to normalize from there. But whenever we see VIX get above 28.3, you should have an alarm go off on your phone that says, hey, what was that chart? Oh, it's double the average S&P return. Probably a good time to buy. Nate, I was just telling everyone that we're sort of kicking ourselves for not building a dream portfolio here. We almost got to our level that we wanted to do it.
Dude, 80 points
Missed it
away
by
on
here.
the SPX, and we would have been there. And not only that, I would have deployed a lot more. Yeah, I think you bring up a really good point, and I'm stashing it away for our next opportunity, because there will be a next opportunity, which is that I think I'm going to actually pay more attention to VIX and the underlying S&P, because I think it's more dynamic for where we actually find ourselves in the market than the actual underlying value. So I'm going to kind of stash that away for next time when we get that big correction.
Yeah. No, I actually agree. This was one of the main charts why I did go all in. I'll show you guys that call here in the upcoming slides. But that's a good call. Instead of making a price point for entry, we could just play it off the VIX. Let's go ahead and keep on going here. Alternatively, on the flip side, this was just the other day. VIX fell more than 40% in the past 13 days. Actually, Diane just posted in the chat. VIX pulling back from the high. So on April 16th, VIX fell more than 40% in the past 13 days. This guy went back and plotted that every time that happened on the chart. Look at this. I need to make this. Oh, I'm going to make it bigger. All right. Historically, similar decline saw SPX higher every single time 1 year later. Average gain 15%, max drawdown 10%. You can't see this. These are tiny, so we're going to go ahead and zoom in on this chart. Look at this. This is insane numbers. When we see a VIX collapse, 40% over 13 days, look at this. Over the next 1 month, 86% of the time we go higher. Next 2 months, 86%. Look at this, guys. We get to 1 year, 100% of the time over the next year when we see a VIX collapse, markets went higher. Obviously, there's some huge years. There's some smaller years. The average is 15%. So I know someone said they have FOMO. Someone said they had FOMO in the chat. I would not worry about what has already passed. I think we're going to get an awesome opportunity here coming up. I mean, pretty much if we get any sort of consolidation here, I think we're going to be seeing the next leg higher. And charts like this, data like this kind of confirms that analysis. This is an insanely positive reading in the markets.
Graham, just to give you a number real quick, if you want to trade that number, just
Bahapi says he thinks Graham is trying to jinx the market. All
right. If you want to trade that number, that the S&P is going to be about 12% higher, March 31, 2027, you can buy the 800-805 calls for $1.40. So there you go. If you hit that average, you can make 400% on the 1 year SPY. It's just in case anyone believes that 100% accuracy is going to hit again and be somewhere near that average.
And what was it, $100 you said?
It'd be $140 to trade it to make
$140.
350, 360.
So I'm gonna buy 1 million of them.
There you
go. Here was just a fun, interesting note that I saw. This guy, Shay Bowlur, I don't even know how to say it. Stock Savvy Shay. He always posts some cool stuff about pretty speculative investments that he invests in. Here was his list of the top infrastructure stocks of tomorrow. So if you want to get a screenshot of this, of course, if you have the opening playbook membership, $1 for VIP. If you don't, we can drop that link in the chat. This slide deck will be in your members area afterwards. If you want to go back and review it, get a screenshot of this one. I don't personally have a, oh, sweet. Don't personally have a ton of opinions right now on this, but I do find his post to be informative. A good little short list here of stocks to keep your eye on if we get the melt up. All right, earnings. This is an old slide here. It's not very quiet anymore. For earnings this week, we've got some big names coming up. We had GE this morning, RTX this morning. I didn't even see. I saw GE was slightly down 4% on earnings. I had no clue what they said. Do you know, Nate?
I didn't even watch it. I had that calendar trade on that I probably should have closed when it bounced up, but it's still about break even right now. And then RTX down, I think about 2% now, but it hung out at literally 0.0% for a good 10-minute span to get out of our calendar this morning, which was very friendly of Raytheon to do for us.
Looks like GE beat. So I wonder if their revisions are lower. I'm not sure. You guys may know more than me at the moment. But later this week, we have Tesla, which is going to be our first major name, Mag 7 name, coming up tomorrow after the close. We also have ServiceNow, which is going to be an interesting one. I don't know if you guys have seen this stock. You guys have probably heard about the software stocks all getting tanked. ServiceNow is one of them. So it was an amazing stock. We traded it a lot, actually, in 2023, 2024. Then it peaked out from the April tariffs and never saw highs since then. And I'll go back to a daily chart. You can see just how bad of a decline it's been, down about 50%. Now, they did just acquire a new company. Pop this up here. ServiceNow said Monday it's completed the acquisition of cybersecurity firm Armis for 7.7 billion in cash. So ServiceNow is obviously trying to make moves right now to change the trajectory of their company, change the whole trajectory of the software industry. I know if you guys see IGV, that's your software ETF. None of the companies are doing that great right now. I'm interested to see, obviously, we've seen these AI pivots work. I know ServiceNow has already done their AI moves, but interested to see if ServiceNow can make a statement that grabs the ear of the Wall Street bulls. I would not be shocked to see this one start going back higher, similar to what we saw with Meta. Remember Meta, down, 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 and then this was kind of a Max Payne play, similar to ServiceNow, but they've changed the trajectory of that downtrend. So this is one to keep an eye on. It's not a high conviction play by any means, but I do see a lot of upside here if they can impress Wall Street. What is it? Tomorrow afternoon. We also have FCX on Thursday. This is a copper play. I'm interested to learn a little bit more about copper. I know that's got a lot of ears and attention right now as the most important metal for AI, supposedly. And then Intel Thursday afternoon. And then one that I skipped, GEV, which was a spinoff out of GE. They had three companies, broke it up to GE Healthcare, GE Aerospace, and GE Vernova. This one was a investment of a lifetime for me. It's quite literally my best return ever on a single stock. What happened was they split off the company, and then so basically they gave you some stocks of GE Healthcare, GE, GEV, and I just held this one, and you can see it's just gone higher and higher. I'm going to hold through earnings, but it's just crossed the $1,000 mark. I don't know how much higher this thing can go. This is only over the last couple of years. So really interested to see what GEV has to say. Obviously, I got a lot on the line there, but I'm not going to sell it. I also don't want to pay the taxes to sell it. So kind of just got my hands tied there. All right, a random hot take here because one of the names here we didn't cover. What was it? CME. Where's CME? CME somewhere on here. Why can't I find it? Anyways, they have earnings this week. Let's see. I'll just pull up on Thinkorswim. Earnings tomorrow before the open. Where is this guy? Huh, maybe I pulled it from a different... Oh, I'm looking at the wrong column. That's why. CME. All right. CME Group has earnings tomorrow before the open. I have a random hot take for you guys. Do with it what you will. But you guys know I love Robinhood by now. Hopefully you know that by now. I bought it about $70, up 15% plus since our buy a few weeks back. Obviously, I tried to tell you guys about this. They had a sweet account transfer bonus going on, a little promo they were doing. They all of their numbers internally are spiking in a good way. Meanwhile, their stock was going down and down. I said, this is like an Amazon.com bubble opportunity, in my opinion. They've got super cheap margin. A lot of good things I like about Robinhood. So I bought it. It's up nicely since then. Robinhood's at $90 now. So hopefully you guys were able to get in on that. But however, outside of Robinhood, this is something that I've been thinking about. And actually we talked about with Chris last week. You guys know that we're getting more and more options listed. Obviously, Mag 7 now has Monday, Wednesday, Friday. I think AVGO does as well. We also see the no pattern day trade rule coming into effect. I think we're, 30 days out now? Roughly speaking. Yeah. That means, in my opinion, just thinking logically, there's going to be more trading. There's going to be more options trading. There's going to be more broker commissions. So does that give us a high chance of stocks like CBOE, which is Chicago Board of Options Exchange, CME, Chicago Mercantile Exchange, and Schwab, et cetera, benefiting from this? I think yes. I haven't made a major play into any of these stocks, but like look at CBOE, amazing trend. Are they just going to continue to eat profits like crazy as they continue to list more options, as options trading becomes more available Monday, Wednesday, Friday on the Mag 7? They're going to start rolling it out across more and more tickers. Pattern day trading rule going away. In my opinion, that's very, very bullish for CBOE. It's also bullish for Schwab. I'm on Thinkorswim right now. This is owned by Charles Schwab. Every time I place a trade here, I'm paying Charles Schwab. If I start trading more because there's more options available, Schwab makes more money. Said typo on, oh, yes. There you go. Type on Schwab. Thank you, Chris. Anyways, that's my random hot take for you guys. That CME has earnings this week, made me think of it. People are asking, do I trade on Robinhood? No, I just use Robinhood for my investment account. So just stock. I just buy stock on Robinhood. I personally don't think the Robinhood fills are very good. That said, it's very user friendly. It's the most user friendly platform out there. My friends use Robinhood. I've got a buddy who trades 60-minute income with me on Robinhood. He gets good fills, so hopefully they're getting better. But I personally don't trade options on Robinhood. That said, there's a lot of people who do. All right, last class, and I had to pull back a few weeks to find this, but this was the last time we had a live class together. I said 6,200 is still the number in mind. You can see my red line down here is actually just below it to get that exact support from the most recent peaks. But I told you guys we were in, I think, extreme fear, a rating of like 9 or 7, something stupid low. We had that VIX spike where it said, hey, good chance that markets are going to have an insane rally over the next year. And then also we had the war chart. Do you guys remember the war chart where 1 month was negative, 2 months it flipped positive, meaning that if you buy 1 month into a war, typically you're going to crush it. So I told you guys there could be some more downside ahead, but I'm buying right here. We never got to that level. I timed it up perfectly. What came next? An insane rally, much stronger than I anticipated. I think probably much stronger than anyone anticipated. Something we don't see very often. It's something that happens every 50 years. That's this strong of a rally. So now we're back to the big question that we always have to ask. Where do we go from here? It would be nice if we had very normal moves, very trendy moves. Makes it my job a lot easier. With these extreme moves, it makes it a little bit harder, but let's go ahead and dive into the data. Here's a quote from Michael Scott for you guys. Oh, how the turntables.
That's a great one.
From The Office. I love that one. Look at this. 1 month ago, we were in extreme fear, rating of 15. That's tiny. We're now back to greed, 70. We're almost in extreme.
High end of greed, yeah.
Yeah. So, oh, how the turntables. Things can flip so fast. It's great. It's great. CPC, let's look at the put to call ratio. As you guys know, if we get a reading below 0.75, I typically look to start taking profits. We got 2 spikes below just the other week, or just the other day, excuse me. We're now back towards the middle, but I do think this is a sign of potential consolidation over the next week or so, just to kind of catch our breath. But I'll show you the exact map here in just a second. Our credit risk chart for the corporate index option adjusted spread. We said if this gets above 1, we're in a yellow flag warning phase. We got to 0.94, pretty close to 1, peaked out, and now we're back down to 0.8. We are de-risked for now. Nothing to worry about on the credit side just yet. We still want to check in on this week after week. So if we do get a spike, we are on top of it. For the market breadth, week over week, this is really a few weeks, but you can see where we were last class. We want to be above 60, above 50 is solid. We were at 25% of stocks above their 50-day moving average. Not the best. And then now let's fast forward to 2 weeks. We are at 70% of stocks above their 50-day moving average. Pretty awesome flip. 200-day moving average, let's look at it. You're going to see a similar story. We want to see this above 60. We were below 50% last class. Now we are at 60%. But there is a note here for you guys. I think we may have too few of stocks above it. We have stocks that are booming back above their 50, which most 50s were crossed below the 200-day, so that's to be expected. But with the markets at all-time highs, right, let's look at the SPX again. I'll pull it up. The markets are zooming past. S&P is zoomed past the 50-day moving average, past the 200-day moving average. However, most stocks, actually I shouldn't say most, but less than 60% of stocks are above their 200-day moving average. So we only have 59%, I think was the number, 58.9% of stocks above their 200-day moving average in a bull market. I would love to see this be at 70%, given where the other numbers are. We aren't there yet, which just means that we have a few big companies pulling us up, which isn't necessarily bad. We can see the markets melt up on it, but it's not as healthy as usual. All right, seasonally speaking, here's where things are going to get fun for us. We know the midterm performance. It was supposed to be bullish March and April. It was not bullish until just now. So now it looks like it may be right. But then in quotes, it's not going to be direct. It was like, meow. But looking forward.
Is that like pew pew?
Yeah, pew pew. Yeah. Looking forward here, seasonally speaking, on a midterm cycle, summer is slow. Someone mentioned it at the start of the class. Summer is slow. We typically see a pullback in the summer going into July. We've got the red line is our midterm for GOP, which obviously that's what we're doing right now. So it looks like if you look a little bit ahead, summer could be another buying opportunity just from a seasonal standpoint before a very, very bullish move higher, a much meatier move higher than what we've seen here. So for those of you who do have FOMO, I would not be jumping out of the seat and deploying every penny of your cash just yet. Let's be smart, let's be nimble, and wait for the opportunities to come to us. This is an old chart, but this was to show stocks typically bottom in March. We had it April, but typically higher from there, all years combined. And then lastly, this is a chart we've been looking at. This is our new Fed chairman coming in. Check this out. So it happens in May. So I've noted, hey, we're typically bottom a few months before the new Fed chairman comes in. Then we go higher for a few months, and then look at this. There's going to be May, June, peak in June, trough going into July, August. So still bullish for the short term, but coming up, kind of looks a little bit more like this, right? So upcoming prediction for you guys. Upcoming prediction. I do think that we may see some consolidation here. And we've seen in the last 2 days so far. We'll see if we get a couple more. Get that CPC back to normal. Let that the percentage of stocks this continue to drift higher, pull those laggards up. So I would hope for some consolidation, but I do not see an immediate dip. We still have some upside left on our seasonals, and those momentum readings, those data points we talked about, show a lot of upside in the near term as well. So I think we're gearing up for the melt up phase. We've talked about this for the last 2 years now, about this AI cycle and how crazy and high it could go. I don't think we've seen the best yet. I think we're going to see an insane boom that's going to make you jump out of your seat. And let me show you how it kind of lines up to the last tech boom in the 1990s. It's pretty uncanny. October to February. So the blue line is the .com boom. Red line is the AI one. Netscape mapped out in the first one, and the launch of ChatGPT on the red line. This box, I showed you this. October to February, based on the .com boom, we should expect some chop. What did we see? We saw some chop. March to May, look at this. March, April, now going into May, it's almost identical. Now, it's not perfectly identical. It's not supposed to be, but just to show you how these seasonally move. So look at what's still ahead. If we are all in agreement that the best is yet to come, we're just now seeing these crazy things start to happen, like the Allbirds. I know we've seen some crazy, but it's getting real crazy. I think we have another massive, massive run before we see the true peak of this AI boom. And this one was insane. I have to say, I don't think we'll get this insane of a rally, but who knows? Who knows? Things can get crazy. There's a lot of money out there, a lot of spending going on. All I'm trying to say is that we are still on this bullish cycle on AI. With that said, I do have a warning for you guys. Funny how it all matches up. This is going to show you June, July, and August mapped up over the .com boom. What do we see here? Another drop. All right, what do we see here? Another drop. What do we see here? Another drop. So right now, while my data on the actual momentum is saying bullish in the near term, bullish over the next 12 months, we may have another buying opportunity coming up. So again, that's why I'm saying if you have FOMO, now is probably not the time to go all in. Let's see if we can get an awesome dream portfolio situation coming up here in the summer. With that said, we are in a bullish short-term position. We should take advantage of this upside in the short term, but let's not be shocked if this happens. Again, I will show you these charts again. This is mapping up June, July, August of the .com boom. I called it a boom because this wasn't the bubble. Bubble kind of is up here. Of the boom period. Here's our seasonal midterm chart. Here's our seasonal Fed chart. All showing dips in the summer, buying opportunities coming up. So there could, I say probably, will be another drop going into June or July. If so, this is going to be our dream portfolio situation. hopefully an investment to remember, like the last one where we had some insane returns. Basically, if you guys are new here, what we do is when we get a drop, a buying opportunity, which we almost triggered on this last one, we just put on a bunch of, I call them speculative, but they're kind of, when you see them, kind of very conservative options plays that pay 200, 300, 400% on a very normal bounce back on some of the best stocks out there. So we got something exciting to look forward to if this happens coming up. All right, just to recap, hopefully we get some consolidation. I'm not looking for a big dip right now. I'm looking for a consolidation before the next move higher, entering this melt up phase of the market. All right, we'll look at sector seasonality grid. You guys should know this by now if you've been coming up. Tech is strong. Energy is the strongest, which is funny. Obviously, this chart can't predict wars. Wars are the reason energy is spiking. Interesting that it all lines up seasonally as well. Kind of a coincidence, but also fun to play with the numbers and follow them. Tends to work out. Material strong, real estate strong. Kind of highlighted the few here. Now we're going to have a lot of movements here because this was the last class we had, which was a few weeks back. So you can see all the movements. For me, we had XLV, healthcare, make a big drop. This was unexpected. I liked healthcare stocks. I still do for the long term, but they're now at the bottom of the barrel. However, tech popped 5 slots higher, which hopefully you guys were able to take advantage of that. I told you guys for weeks, tech was down here. It's not, we typically like to trade the ones at the top end of the spectrum. Tech was down here. I said, hey, we're getting a pretty crazy dip. You should probably start buying some tech. I bought some tech for a bounce back. It's bounced back up. And then just to reiterate again, IWM going higher, gold going lower, TLT going lower. Weird mismatch that really doesn't normally happen. Normally, if Russell's going lower, gold's going lower, and interest rates are going higher, meaning TLT is going lower, we are seeing the Russell 2000 separate itself from the pack, which to me is just a telling sign that we are about to see a melt-up phase. Wall Street does not care about the interest rates when it comes to this melt-up phase on the small cap. They say, I think it's going to come over the next 12 months. We're going to see some insane returns. It's very realistic. If the NASDAQ goes 15, 20% this year, that the IWM goes 30, 40%. I think they're starting to front run this right now, and that's why it's leading the way. So for the time being, I'm just going to tighten up my sectors a little bit more for looking for my trades. Again, I do think we're going to see another leg higher here going through May, and then hopefully that summer trough where we get a big buying opportunity. So that's why I'm just going to keep it tighter for now. We'll have a lot of juice right now on tech stocks. So having tech back in the top is going to help us out a lot with our selections, and then you can see the other names as well. All right, for the nitty gritty, we'll get into some trades here. Let me pull up the Apex. This is old. Let me just boop. Apex software, which uses weekly price action on some of the top stocks out there to give us entries and exits where no two stocks have the same rules. Pretty cool. Check this out. New entry on Apple. A double entry on Apple. Hopefully you guys have the Apex software so then when I'm out, you would have entered, I've got this thing in the way, but you would have entered back here in the blue, first blue, you'd be up nicely. All right, let's flip through, see what, I'm guessing we're going to have a lot. AMD, man. Hopefully you guys have Apex again. Caught this one while I was out. AVGO, no surprise there. Oh, Bitcoin new entry. Now, you guys know I'm not super bullish on Bitcoin right now. Not a high conviction play. It's at the bottom of our barrel. I would not take this on Bitcoin, but it looks like if you did while I was out, you probably hit your target. Meta, Microsoft. All right, so we got a lot of selections here. Oh, Nate. Oh, Nate's not here anymore. Progressive. But again, we don't want to take stocks that look like this in a downtrend. We want them to be in an uptrend with a signal. Oh, and Tesla, they have earnings this week. We're not going to trade it. Let's go to Apple. Did anyone see the news on Apple yesterday by chance?
The new replacement?
Yep. Tim Cook is gone. New CEO coming in. I think that could spew some more excitement for the stock. We like tech. We've got a double entry on Apple here. Hit that first profit target. Now we're on to the second one. So if you want to trade Apple underlying, you can see here Apple. If you want to trade the stock, I'm going to type this up. Target is 283.74, which is about 5% away. Very reasonable. Stop loss 2 32.40. Now, what's cool about the Apex software, we come down here, it'll tell us this entry has an almost, we'll call it 80% win rate, over 49 entries since 2020. So pre-COVID to now. And it averages 37 days. So if you were to enter the stock, it may take 4, 5, 6 weeks. But hey, 5% in 4, 5, 6 weeks is a pretty stellar return on underlying. Now, if you want to trade the options, we got these nice buttons here. We'll look at the call option. I'm not going to take the call. Let's go ahead and take a look. Current price. I'll paste this in. If you want to take the call, bam, maps it up with the average hold time plus the 30-day buffer. But you can see here the returns, and I'll just zoom this in actually. The returns, if we hit the profit target by next week, you make 62%. If we hit it in 1 month, you hit 45%. At expiration, even if we make it to the profit target, you lose money, even though you're right. Move 5%, you lost 5%. Not my favorite way to trade. You guys know. Earnings in 10 days on Apple, says Chris. Good note. We're going to have a lot of earnings. But very, very good note. If you guys don't want to hold it through earnings, you can avoid this one. Or just adjust your strikes, or your expiration to before earnings. Here's a wrap order on Apple, which is a little bit more expensive than I typically like. Let's see. Yeah, right in the middle. I think you could probably get this for a little bit cheaper. I'm going to say use limit order, start at $5, and then bump from there. Max ROI on this one, 83%. So if Apple, it doesn't even have to get to the profit target of 283, it just has to get above 275, you're already outperforming the call. A smaller move, bigger payout. That's my kind of trade right there.
If you really want to, or if you get it at 5.
If you get it for 5, if you get it at 5, you're going to get 100% payout. If you are unfamiliar with this approach, again, in the $1 VIP members area, I've got recordings for you guys, trainings Nate and I both do on options and what we're talking about when we say wrap order debit spread, or in this case, a max ROI spread. All right, this is a max ROI play on Apple. This is saying what it's doing is the Apex software is looking at, okay, our target price is 283. Let's sell a strike just below that. So we got 280. Pull the prices, tell us the payout. So now, if Apple gets above 280 by expiration, payout's 160%. I like this one a lot. I think this is a very reasonable play, really solid payout, and it doesn't have to move that far from here, right? That's less than 5% on the underlying for you to get your payout. Again, the call option, if it were to even hit it this week, you only get 62%. Not very good. And as Chris noted, with earnings, these are going to be more expensive too. The good thing about doing a debit spread is you offset a lot of that premium. All right, let's see. Let me see if I can find one that doesn't have earnings. It's going to be tough. Like AMD has earnings. Oops, AVGO will probably. Oh, AVGO has earnings in. Okay, this is good. We got a couple of months. Let's give me AVGO. Chris says folding iPhone coming out. That'll be interesting. All right, AVGO chip stock. We got a double entry here as well. If you took it while I was out, you hit your profit target. We got a new one now. Let's go ahead and look down here. 76% win rate. Average hold time 32 days. I'm just going to skip the call option. Let's go right to the wrap order, see what it's paying. All righty. This is AVGO. Again, this is, thanks to Chris's note, this is a better play if you don't want to hold through earnings. This will not be affected by earnings, as the earnings, I think, are in June. Let me just give you the exact date just to make sure. June 3rd. So we'll be able to hit our expiration before this. So, and this may need to be refreshed. Let's see. Well, it's at $3.99 now. So all you need is AVGO in this case to move $1. That's 0.25%. 0.25%. If that happens, you make 89% return on your investment. That's what? I don't even know what the number is. An insane multiplier of the tiny move. That's why I love these wrap orders. Here, I'm actually going to take this one on AVGO right now. Let's see, 397. Sell the 400. It's at,
400,
yep,
May 15.
yep. Try 132. It's moving around a bit. Oh, filled right away at 132 for the wrap order here on AVGO. Again, it has to move $1. It has to gain actually now 20 cents over the next 3-4 weeks for me to get that 89% payout. Not bad. All right, Max RI. Holy moly. Check this out. This is a very aggressive play. This is more of your lotto board style play. This is saying AVGO, if it gets to our target here, so the price target here is 430.93. Going to look one strike under. So we're at 430. So if we hit our target, what's the payout look like on the option? In this case, 400%. I'm just going to grab one of these. It's 50 bucks. I'm okay with risking 50 bucks to turn it into 250. If it works out, I'm also okay with losing 50 bucks. So always keep that in mind when it comes to risk and position sizing. Like I told Jason's class last Friday, I always imagine when I place a trade, say I put 50 bucks in, what do I think? Or imagine I lost it. Hey, Graham, I just lost 50 bucks. How does that make me feel? If I'm okay with that, then I know I haven't risked too much. If I feel queasy about it, you've probably risked too much. All right, let's see. Anyone get filled on that one? Again,
Didn't see
AVGO's
anybody
prices.
posting fills yet, but
AVGO just popped higher too. So what's that?
I didn't see anybody posting fills yet. Henry just said $1.33.
I got $1.32 on the first one. Max profit on AVGO, which one? Oh shoot, I left it out.
It was 89% on the
Yep.
first one on the wrap and 400% on the max.
Then Max ROI
I can
400%.
repost them all.
I'm not getting filled at 50 cents. It's moving all over the place. It's still fairly wide this morning, so I'm just going to let it sit there. If it fills, it fills. If not, I can come back and adjust. Oh, cool. Thanks for posting that. All right, so we have two here. I got to put this in the deck for those of you who do have your $1 membership. So you can go back and review it. Boom. And I just realized I'm almost out of time. I got to.
Yeah, you gotta get to another show here.
I always do this to myself.
That's all right. Between Nate and I, we delay you too.
Oh, no. Let's see.
Tuesdays are the only days where I have to make a second column in the deck in the document for opening playbook trades because there's
Oh,
so
yeah.
many.
Try to hook you guys up. Let's see. All right.
Yeah.
Earnings, May 10. All right. Thank you again, Chris, for that note. We'll flag this so you guys can see it when you review the deck. All right, let's go down the clock dashboard, pick of the week. Then we'll wrap up with the Newton new entries of the day. And I'm be out of here to the next thing, which hopefully I'll see you guys there as well. All righty. Let's see if I flip this on. Oh, wow, that's an interesting one. Adobe. Adobe's another one of those software stocks that's been beaten up. I don't like this trend. Again, if you're feeling frisky with Adobe, you may just want to buy the underlying stock just because there's so much upside. Let's flip this off. Ooh, don't like that one. What I'm looking for here is ideally wanting a good uptrend, which it doesn't look like we're going to get in. Oh, JBL. Oh, man, this one's back. I guess it never really went away. This one has been an amazing ticker. Let me zoom in real quick, see if we can get a better view. So what we're looking for here is stocks that have gone up every year on the same exact dates. We want to get as close to 100% accuracy as possible. In this case, it's gone up 9 of the last 10 years. So you can see there's a 16% drop here. Massive average return, 7% average during this 27-day window. So let me do this. This is for the underlying, whoops, JBL. Entry is today. Exit is May 18th. That's a 27-day hold. Average 7.7% return. Let me check for earnings since I didn't do that for Apple. They don't have earnings until June, so we are in the clear here. What a stock. This thing's a mammoth. Woo. Newton's green. This thing's insane. All right, well, what I'm going to do here, simply because we've moved so fast and I am looking for potential consolidation in the market, is I'm going to play this more conservatively with an income approach. So if you have on the clock dashboard, you know that flip over to option strategies, you actually have 6 choices here. Basic call option, which I'm not a fan of. Conservative income, which is 20 to 30% ROI. Moderate income, 50, 60% ROI. These are going to be in the money or out of the money, depending on how you look at it, where we can see a little drop in the stock and still get paid. The wrap order, which is my favorite way to trade, half target and max ROI spread. This is going to be your lotto type of opportunity. I'm curious what it has to show because I'm guessing the options market has to be pretty expensive right now for this one. Now I'm wondering if it's going to load. There we go. All right, I skipped that one. I'm just going to go right here to moderate because I just looked at the clock and I realized I'm eating up too much time. So similar to our gold trade, this is going to be a bull put credit spread. If you want to do calls, you can. You would just go in the money, flip it from put to call. But you want to go credit, in this case, 185. Higher the better. So the most you can get for it, the better. What just happened? It's going to be, I'm guessing it's going to be bouncing all over. So just make sure you use a limit order. All right. This is a 58% payout. ROI. Potential. And then our buffer, meaning how far could it drop, is 5.5%. So looking here at the chart, we're doing 320, 315. So JBL, 22 of May. It can go higher, it can go flat, and it can fall as much as 5%. Even if it falls 5%, we're making 58% return on investment. That's pretty stellar, in my opinion, especially for a stock that looks like this, that's in an amazing uptrend and just crushing it right now. So let's go ahead and look at the options again. It's going to be weeklies. Let's make sure to use a limit order here. 155, the higher the better. I'm going to start at 185. And crawl it down. Again, you can see just how wide the net is showing minus 50, which isn't even a real number.
You got like 2 minutes, bro.
All right.
3.
Let me just do this. Sorry. JBL. Nice little ticker there. I hate these little enhance the slide. All right.
I can always entertain the crowd if you're.
Yeah. Let's go Newton long. Oh, we got a bunch. I may have to just pick 2 and go. Let me fly through it. Oh, Walmart. We'll just do 1. Walmart, flipping positive of Newton. Love it. They have earnings coming up on 4 weeks from now, a month from now. That's a beautiful trend. It looks like it's taking higher. So Walmart is our number 1 play and our only play. We're going to go long. And I got to speed through this. Walmart bullish. Let's go Newton bearish. Ooh, Constellation Energy. That's interesting. GE breaking through after earnings. Don't love to see that. Yeah, MCK. All right, I'll give you MCK and CEG, just if we get a fade there, continuing. So MCK, CEG on the bearish side for you guys. Now I got to bounce to where I'm actually meeting up with Alex in 3 minutes. I want you guys all to be there. We'll post a link here in the chat for you guys to join us. We're going to be going live here in 3 minutes. If you guys were paying attention about a month ago, Alex and I were talking about this new way of trading overnight using options data to drive the stock direction, the stock market direction. Really, really cool. We had to shut it down that week. We had a limited amount of spots open for it. So we hit that number, shut it down. We've now had, I think, 15 spots open up since then. So we're doing a 1 more day, just a one-off opening for this. For anyone who's interested, it's not going to be available. Again, we're just trying to get to that spot. I think it was 75 total spots. We hit 75, 15 people ended up dropping out of their commitment for it. So now we got 15 spots for you guys. So click that link in the chat. Jump on over there. You're going to see something new that you've probably never heard of before. of options market driving stock market direction. I will see you guys there in the room.